Mr. Mayur Shah, partner at EY, who's going to help us slice and dice the finer details of Budget 2025 and how it impacts us Naukri walas or salaried professionals.
When you are choosing to be a part of new tax regime, the advantage which you have is that you get standard deduction up to 75,000. But if you are going under old regime, then you will get only up to 50,000.
Right.
There were a lot of deductions which was granted in respect of conveyance which you incur from traveling office to residence and residence to office. So to do away with this, they have come up with the standard deductions.
Mayur Shah is a tax expert with extensive experience in corporate and personal taxation, currently serving as a tax partner at Ernst & Young. Today, he is here to decode Budget 2025 and share actionable insights on tax-saving strategies, salary structuring, and financial planning for working professionals.
Let's talk about consultants, freelancers. How will the tax structure be for them now?
For them, what is advantageous is whatever expenditure they incur to earn this kind of income, such as their travel costs, all kind of gadgets, they can claim as a deduction. As a result, whatever you have earned out of that, those expenses will be claimed as a deductions.
Announcements of Budget 2025. Prima facie, it's good news for a lot of us. Help us understand, firstly, is it really good news and how big a good news it is? Hi everyone, welcome to yet another episode of Workwise with Naukri. I'm Karunya Rao, and joining us today is Mr. Mayur Shah, partner at EY, who's going to help us slice and dice the finer details of Budget 2025 and how it impacts us Naukri walas or salaried professionals. Mayur, thank you so much for taking time out and joining us here today.
Thank you for inviting me.
So, when I look at the budget or the key announcements of Budget 2025, prima facie, it's good news for a lot of us. Help us understand, firstly, is it really good news and how big a good news it is?
See, if you look at the theme line, the way Finance Minister has announced that for middle class, they are offering substantial discount to the tax. So, this has been done in two phases. One is that they have introduced rebate, which earlier limit was around 7 lakh, which has been enhanced to 12 lakhs.
Yeah.
As a result, the person who is earning income up to 1275 will not have to pay any tax. That really helps the persons who are drawing salary up to 13 lakhs, more or less. But if you look at across all the taxpayers, there has been a slab rate benefit which has been enhanced for them. So, there will be a lot of advantages to all the taxpayers across whichever salary levels they are or whichever type of income they are earning. The benefit to them is around 1,10,000 because of the slab rate which has been
Depending on which slab rate you're in.
That's right. So, if a person is on a maximum slab rate, in all, he would get 1,10,000 as a benefit from income tax.
Right.
Subject to additional benefit on account of surcharge and education cess, which also gets automatically reduced as a cascading effect. The second thing which you see that, a lot of TDS provisions being rationalized, by which, they made money available to the people for it to be spent. Second thing, if you see that TCS has also been removed, by virtue of which, a lot of money which will come in. Now, in TCS, what they have done under liberalized remittance scheme, when people were remitting money up to 7 lakh, which was not subject to TCS, it will be only for residents who are remitting money or who are going on a foreign tours.
Okay.
So, for them, if they have spent around 7 lakhs for that, or anything in excess of 7 lakh was subject to TCS. Now, that limit has been enhanced from 7 lakh to 10 lakhs. As a result, there is a lot of money which is left with them. So the theme is just not, ensuring the tax deductions, but leaving money with the taxpayers so that, they can utilize it for whatever purpose they want.
So broadly, it's good news across the board for all kinds of categories of salaried professionals.
Absolutely.
Okay. Well, you said the idea is to give more money or to help people save more money after their taxes are cut. today, Mayur, we are here primarily to talk about how the salaried professionals, the Naukri Shuda people, will get impacted by the new tax slabs and the new slew of announcements that were made by the finance minister. Now, there is a lot of misinformation going around on social media, WhatsApp groups, coffee conversations, etc. So, can you help us understand exactly what are the different slabs that have been announced this time around?
Sure. So, let's look at new tax regime. So, old tax regime has remained the same. There is no change in that. But in new tax regime, up till now, up to 3 lakh, there was no tax. But now that slab has been increased by 1 lakh. So, therefore, up to 4 lakh, there is no tax. Between 4 to 8, one has to pay tax at the rate of 5%. Then from 8 to 12 lakhs, the person has to pay 10% tax thereon. And any between 12 to 16, person has to pay 15%. 16 to 20, the person has to pay 20%. And 20 to 24, they have to pay 25%.
Well, that was a lot of numbers, and I know that, numbers is something you work very well with, but most of us would also like some visual cues with it. And what better a prop than money to understand money the best way possible. So, I have here 16 notes of 100 rupees. Let's say they're all 1 lakh each. I wish it was true, but 1 lakh each, 16 lakhs is my income. I'm giving you my 16 lakhs worth of annual income. You have to now show and tell how exactly will the whole tax system under the new regime work, which was announced recently.
So let me explain this through these notes.
Sure.
Now, out of your 16 lakh salary, 75,000 will be subject matter of standard deductions.
Right.
So let's put this aside because it suffers no tax.
Okay. More or less 75,000 gone there.
Perfect. Now, slab rate, as we have discussed, up to 4 lakh, there is no tax at all. So therefore, these 4 lakhs will move out tax free and it will be yours.
Okay, great.
Right. Now, next 4 lakhs, that is slab rate between 4 lakhs to 8 lakhs, will suffer 5% of tax.
Right.
Which would mean that I'm giving you this 4, but I'm retaining 1 for 5%. Of course, I will adjust it in the next slab.
Okay.
Right. So now 5% of that is still there over here, which is the tax. Right. Now another 4, that is slab between 8 to 12, which will suffer at the rate of 10%.
Okay.
Right. So I'm giving you 4 because I have retained entire 1 lakh. So 10% now again I'm putting it
You're
back over
adjusting
here.
in that. Okay.
So therefore another 4 is yours.
Okay.
Now what is left is 3.
Right.
These 3 will be subject to tax at the rate of 15%.
Yes.
But given that I have already retained over here, this entire thing will come back to you.
Okay, that's not bad.
That means out of 15 lakh, what tax you are paying is just around 10%.
Let's say instead of 12 lakh, which is now the big headline number everyone's talking about, that okay, up until 12 lakh rupees, you don't have to pay any tax. And even if it's 1275, because 75 will go into standard deduction.
Correct.
Let's say my income is 12 lakh 76,000, 77,000, because life is never that simple, right?
That's right.
So if my salary is around 1276, then what happens?
Yeah, and it's very important questions.
Yeah.
And many people who are falling within this regime, they are kind of really worried that what should I do? Should I go for a salary cut then? Now, Income Tax Authority does offer some advantages over there as well. So if to the extent your income is in excess of 12 lakhs, or in our case 12 lakhs 75,000, if tax liability is going beyond the additional income of about 12 lakhs 75, so you were take an example of 12 lakhs 77,000.
Right.
So
the
2,000,
excess 2,000 rupees.
excess income is 2,000. And if my tax liability is much more than that, then tax will be limited to 2,000 rupees and not anything more than that.
Okay.
So that you don't land up paying more tax because of your income has just increased by 2,000. So this is how they are trying to see that because of additional income, you don't land up paying taxes on the full income which you have earned during the year.
So only on the excess.
That's right. So excess is taken away as tax.
But if we look at this regime, again, there is a lot of conjecture, misinformation, confusion. Still, it will take some time, I'm sure, to settle in. But what essentially, as per you, are the advantages now which have been brought to the fore or which are being given to a taxpayer, a salaried taxpayer?
Sure. So, when you are choosing to be a part of new tax regime, the advantage which you have is that, you get standard deduction up to 75,000. But if you are going under old regime, then you will get only up to 50,000.
Right.
So that's an advantage of choosing new tax regime. Second thing is that when employer contributes towards national pension scheme, in that case, that such contribution is still available as a deductions.
Okay.
And therefore, to that extent, you can still claim those deductions from before calculating the tax liability. And therefore, that's how you can reduce your tax liability as well. So these are the two advantages which are still continuing. A primary reason is that India does not have a very government-led social security system, and that is where national pension scheme was announced, so that people can start contributing to it. So upon retirement, they have fund available
They have
with
a
them.
corpus, yeah.
Absolutely, and they are continuing with that theme without disturbing that, whether under old or new. It doesn't make any difference to them.
What would be your advice to people who are not, starting on early in their tax planning and financial planning journey?
So my advice is that they should start looking at making investment. See, currently at this age you are able to take the risk. I think at least I would have advised my son to invest in equity market or mutual funds, because it's okay to take risk at this age. By then the corpus will get built substantially. But gradually, depending upon the age, you have to see that what level of risk you intend to take and what level of risk you want to avoid. And basis that it will happen. Now, at this age, what I would also expect that, they should try and see that, the fund they are using wisely and dividing between secured and unsecured environment. So risk-free or risk. And they should allocate appropriately and start investing in it. Otherwise, what will happen, unless you develop this habit, later on you will become lethargic in making investment like that. And therefore, it is good to start implementing from now. By the time you start getting good money, at least you know where and how to deal with it.
Yeah. What exactly is this 75,000 standard deduction all about? What does it aim to do for my tax savings? And why is it there? What is this figure?
If you look at in past, there were a lot of deductions which was granted in respect of conveyance which you incur from traveling office to residence and residence to office. And there are a lot of other exemptions which were there. So to do away with this, they have come up with the standard deductions.
Okay.
See, if I'm doing business, I would have expenditure I could have claimed against my business income. But salaried employee they do have expenditure, but they can't claim it. As a result, standard deductions were given that this much expenditure you would incur, and therefore, they have given standard deductions.
Okay.
In relation to that.
Since you're talking about investments, obviously I have to ask you, what happens to my capital gains tax? Is that also part of my income, or that will be taxed over and above? How is that positioned in the whole scheme of things?
Sure. So, new regime is applicable to normal income.
Okay.
But it does
What's
not.
normal income?
Normal income is other than capital gains.
Okay.
So other than
Your mehnat ki kamai.
Your mehnat ki kamai. So capital gains are taxed at a special rate.
Okay.
Which is for long term it is 12.5, and I'm only believing that we are investing in equity.
And long term is
12.5% of tax which needs to be paid thereon.
I mean, I'm asking
long
to
term
define
means
long term.
that when any securities being held for more than 1 year
Okay.
and which are listed,
Hmm.
then it is 12.5.
Okay.
If it is unlisted, then one has to hold it for 24 months
Okay.
and then it will become long-term capital assets. And
Okay.
any gain realized thereon is long-term capital gain.
Okay. If we look at it from a not just money or income tax point of view, but the budget has made a few provisions for startups, SMEs, gig workers, opening up the labor market, or reforming the labor market rather. How would you assess the budget on those parameters? Any provisions or announcements that really stood out for you?
Yeah. So, these are not under Income Tax Act,
Yeah.
some announcements which are there. But what they have done is that to boost SMEs and MMEs, they've extended the turnover limit as well as investment limit.
Okay.
Investment limit has been boosted up 2 times, whereas turnover limit has been boosted up for 2.5 times. Which would mean that other organizations which were not covered within SMEs and MMEs, now they will get covered. As a result, a lot of advantage will flow in because SMEs and MMEs are getting loans at a very reasonable rate.
Yeah.
Plus, when anybody has transacted with them, the money needs to be paid to such organization within 45 days and cannot be extended beyond. Otherwise, the person who has not paid will suffer a lot of penalties.
We've covered Naukri professionals, but let's talk about consultants, freelancers, gig workers. How will the tax structure be for them now that, a new slab has been introduced?
Yeah. So as far as taxation is concerned, the tax calculations and rebate, everything will remain the same.
Okay.
But what will be taxable will change. Like as we were discussing that salaried employee will get standard deduction of 75,000. But such deductions are not available for freelancers or others, But for them, what is advantageous is that, whatever expenditure they incur to on this kind of income, such as their travel costs, their, if they have an office
Buying
premises
a laptop, iPhone,
absolutely
all kinds of gadgets.
all kind of gadgets they can claim as a deductions. As a result, if whatever you have earned out of that, those expenses will be claimed as a deductions.
Okay.
And thereafter, whatever is there is considered as an income, and on that you have to pay tax.
But is there a limit to claiming all these expenses? Because if I'm a freelancer, I could put my house rent as an expense if I'm working out of home, my Wi-Fi, my cell phone, my laptop, my car, my fuel, pretty much everything I could claim as an expense. Why not?
Yeah, absolutely. And good point you brought it up. There is one aspect as a taxpayer which you need to make sure that amount which you are claiming as a deduction should be relatable to the income. Now, when you are saying house rent being paid, you are not using house as an office premises so that to claim as a deductions.
No, but if I work from home, then
would you be working from the entire house or only part of the house?
part of it, yes.
So you have to be reasonable in claiming your deductions.
Okay.
And this matter is not today. This matter has been debated since 1970s. There's a lot of such things were there, like architects were never engaged as an employee. For that matter, even lawyers, because they are practicing lawyers.
It's a services economy, services business.
Absolutely. And there was a restrictions on from the bar council that if you are a member of a bar council, you cannot be employed. As a result, they are always working as a consultant. So these issues were there and has been there. They are claiming deductions. Deductions can be claimed only based on what is relatable to income that is being earned, and that you can claim. Otherwise, those are considered to be a personal expense which you have to exclude.
So, company benefits also include LTA, ESOPs. Some companies also have started giving electric vehicle perks. So how can employees take advantage of that to sort of, again, bring down their taxable income?
So all these, we spoke about vehicle being provided, whether it is EV or otherwise, it still falls within the same policy.
Okay.
As far as ESOPs are concerned, anything which is being given to you over and above your pay is anyway taxable. So there is no advantage as such. The only thing is taxation of ESOP occurs only when the shares are bought by the employee and not at the time of options are granted to the employee, or not at the time when it vested with the person. So to that extent, the taxability will remain the same in those situations. So it doesn't offer any tax planning as such, but definitely it gives you added advantage. And ESOPs are generally being implemented for very business reasons, and it is given to strategic employees only.
This conversation is so interesting. I can think of so many ways to sort of now structure my income, or even as an employer, how I can help my employees and my colleagues sort of structure it better to reduce their tax liability. But a lot of people still feel that they don't have control over tax burden. So could you, while you're here, advise us on some smart techniques or strategies to help navigate that?
See, what I will tell you is that there are a lot of compensation components which are tax effective in a manner. So what happens when a company or when any employee is negotiating a contract with the employer? They can say that I want to go for these components or this thing. Such as you said, you would like to go for car. Rather than saying, reduce my salary and going for I want to go for a car. Ultimately, company will look at cost to the company. Right? Similarly, the company is providing you phone. Which will be, obviously we all are using our phones for office purpose.
Yeah.
And mainly for office purpose.
Sadly.
Likewise, there are many such instruments which are being given to us where we are using it for office purpose, but we are incurring personal expenses.
Right.
Those are business expenses, let it be a business expense. And, to that extent, once you negotiate any employment, you will be able to save taxes on that. Because anyway, this was not supposed to be tax in your end. You are using it for office purpose.
Primarily.
Yeah, primarily.
But beyond this 75,000 standard deduction, can I do anything in this new regime to get an exemption or a rebate?
Yeah, what you can do is make sure that you participate in national pension scheme through your employer.
Okay.
So in that, if you are not contributing to PF, then up to 7.5 lakh or 14% of your salary you can carve out for national pension schemes, which then you will be deciding where to invest, whether to invest in completely secured investment, or you want to take an aggressive stance and invest in equity market, or you want to use any hybrid model. And basis which, you will be able to build capital for yourself till the age of retirement. And this is what one can plan. So this is one more advantage which is available under the new regime, which you can explore.
What about home buyers, professionals who want to buy home? Has the budget sort of addressed that in the recent announcements?
So actually it is not for home buyer as such. So what earlier used to be that there were anybody who is owning accommodation but could not occupy that accommodation, then it was considered to be a deemed let out property, and accordingly notional rent used to get taxed. However, there was a condition that if you fulfill certain conditions, then up to 2 houses which are not occupied by you can be claimed as non-taxable.
Okay.
Now those two conditions were that it should be either self-occupied, or you could not occupy for reasons of employment.
Okay.
Right? Now 2 houses not occupied for the reason of employment will be very difficult to have that thing. So what they have simplified, saying for whatever reason you are not been able to occupy that house, it's fine, will not add any notional income up to 2 houses. So to that extent, they have given leeway. And that's why, at least I see that real estate believes that there will be a lot of boost for second house which people can have. Now, having said that, you look at when I buy a house, I'm obviously going to take a loan.
Yeah.
Now, if I have incurred any interest cost, then if I'm following new tax regime, I don't get any deductions on account of that.
Correct.
And therefore, it has no meaning for me as far as new rates are concerned. But if I go with old rates, then I can do it.
Another thing is rent, right? House rent allowance. Again, the new regime does not have any provision for that.
Yes.
So for renters versus buyers, when it comes to housing related expenses, which one is the budget favoring more?
See, I would say that it is neutral now if
Okay.
you are going for new regime.
Hmm.
But if you are going for old regime, from a tax perspective, more likely than not, rented house is much better.
Hmm.
But when I take such a decision, in fact, I need to consider few aspects, and which are other than a tax aspect. So one is that, when you are renting house throughout your working life, upon retirement, what do you have in hand? Because, and whether value at that time when you may want to make capital investment, whether you will have so much value available with you,
Hmm.
right? If you would have invested early in a house property, probably, the value of that would have grown substantially by the time you retire. So that is one aspect. Secondly, the tax advantage which you get
Hmm.
vis-a-vis EMI you have to pay. Almost if it becomes same, then where is the problem? Because you are able to create assets. So at least I am a firm believer of creating assets rather than, saving some tax.
So we've talked about saving, spending, buying a house, not buying a house, working, not working, having your own setup. But if a young professional wants to start their journey today, what is the most important first step they should take for planning their finances, perhaps for the next 10 years? What is the most important step one?
What they need to figure out is that, whether they want to start their own startup or they want to get into a job. Second thing, that will help them to decide where they want to invest their financials. If you are starting your own business, there is continuous need of money which will keep coming in.
A lot of liquidity you should have.
Correct. And at that time, you can't think of, investing or, doing anything else. But when you choose your career to be in employment, that's where you have to start planning for financials, not for today, but also for tomorrow.
Yeah.
And how do you plan also is very important. Whether you will invest initially more riskier investment so that you get a better rate of return. Of course, you need to take a wise decision therein. Otherwise, you will end up losing everything.
Financial laws, tax regimes, they do keep evolving with time. What was in place 4 or 5 years ago perhaps may not be relevant today. But my financial journey is an ongoing thing as well, and I need to be at it. So how do I make an informed decision for my finances for 10 years from today?
Yeah. So what you should do is, and at least I used to guide my son in the same manner that, think about making investment just not for now or for tax saving. Make an investment which will yield you some good result over a period of time. So what he did, that he decided to invest in mutual funds because he didn't want it to enter into equity market because it's not up to it right now. Now he started doing his work on equity. He's analyzing, seeing that whether it is growing, not growing, which security is going to grow, and he just takes small investment therein, and that's how he's planning his journey to get into a risky investments, so that he takes a considered call, and also simultaneously makes absolutely secure investment in government bonds. And very interestingly, what he did, he bought from the market, because when you buy from the market, which has a longer maturity period, you get it at a discounted price. As a result, the rate of return is much higher. So he started thinking in that direction. So the way I look at it, and the way the persons who are starting their journey should look at it, that initial investment should be made, though start with some secured, some semi-secured, and then get into a risky one.
So diversify and take it easy. Take small steps, but look at everything.
Absolutely.
Well, thank you so much, Mayur, on that note, for joining us and decoding, all the jargons, all the complexities around the budget, especially the taxation rules in place, and helping our viewers understand the finer details of it. Thank you so much.
Thank you very much.
With that, it's a wrap on this episode of WorkWise with Naukri. Thank you so much for tuning in. Do tell us what your key takeaways were in the comments section, and don't forget to hit like and subscribe.